Hey traders, checking in on the stock market today. So bulls continuing to rip higher, but a shuffle is going on. We do have one major sector seeing a bunch of weakness while another is taking the lead for the bulls. We'll check back in on commodities and we'll look at our psychedelic names which continue to grind higher. So looking at the S&P 500 futures chart, the 4-hour uptrend continues, the higher low every day pattern continues, and the bulls continue to keep their complete control. We can run significantly. We know we will pull back and form a daily higher low at some point. We assume it'll be a daily higher low unless there's massive volume behind it. Again, let's remember our rules. Back here on the way up, what we were talking about the entire time was pay attention when you see all three of our major sectors at the lows at the same time. It'll be very notable. It happened maybe one or two times for a very brief period of time on this run up. And then once this pullback started, it was happening frequently. It was not uncommon for it to be going on. So today we had a shuffle, and I had a big lesson that I learned because I was scouting XLF short and I gave up on it after yesterday. And the lesson for me is the FOMC reaction that day, the 2 hours that are following the FOMC, it's the snow globe being shaken up, and you've got to give it time for the pieces to settle, to see where everything settles. And so it's not necessarily in those first 2 hours. It's just a reminder for me to stick to the following day for proof of what took place in the initial 2-hour reaction or for some kinds of changes. So today was very notable because on the most recent leg up, we've been seeing all of our sectors fairly strong. And today, XLF was extremely weak. It was down almost 2% at the low of the day. That's a significant amount for one of our major sectors, but it was offset by IWM strength to a certain degree, and certainly QQQ and big tech and semiconductor strength. So that's just rotation. One sector completely offsetting weakness in another sector, and right now XLF has weekly consolidation underway, and you can't tell it all based on the S&P 500 because again, it's being offset by our other sectors. So we will not see fear unless all of our major sectors, XLF, QQQ, XLV, are dropping at the same time, at the low of the day at the same time. That's a very critical aspect. So again, keep an eye out for it. But if that does not happen, we're not going to expect a big red day. Yes, an individual sector can get a big red day, but not for the broader market. And the lesson for me and the takeaway, again, it's all about our mindset as traders because I can choose to look at it two ways. I can beat up on myself and count the money that I missed and talk about what an idiot I am and feel really bad about myself, which will have negative ripple effects on how I trade from here in the short-term future. Or I can look at it and say, okay, well, I was initially on the right track, and this is the lesson that I'm going to learn from it. And I didn't lose any money. I just left money on the table. All right, ready to go for next time. Mental note, where I write it down physically, ready to go. And that props me up, ready to succeed with confidence for the next trade that I attempt to take. And those are two very different paths that you can choose to go down based on how you control your emotions and your thought processes. Rant over. Looking at SPY, higher low every day. We'll be watching for first hourly oversold conditions when daily consolidation begins, but no sign of it yet. Yes, daily consolidation is due, but we can keep running. QQQ, same deal, higher low every day, closing up at the high. Yes, the daily RSI is extreme, but it has gotten higher in the past as well. We hit 81 a couple of months ago, and it's currently at 78. So we know around the 80 level is definitely a historical pullback point. So if we were to see another big green day, we would start getting ready. But again, it won't surprise us at any point the next time we see daily consolidation from here, and there's tons of space for a daily higher low, and I will anticipate that bulls will probably be looking to buy first hourly oversold conditions. So XLF confirming a daily downtrend, and if we see a green day tomorrow, it'll set up a confirmed daily downtrend with no follow through and a potential weekly bull flag. So right now, XLF is a weekly bull flag. And I would say if we drop down and lose the EMA 12 support, which is right at 39, that would start to negate a bull flag. But the burden of proof is on bears to keep control of the daily downtrend, show up with big bear volume, and give us a significant enough retracement to negate a potential weekly bull flag. The best case scenario for the broader market would be XLF continues to pull back, the other sectors hold on well, keeping the broader market holding on well for the bulls, and then XLF sets a weekly higher low right as the tech sector starts pulling back. And that would be the rotation that we got used to before the last monthly consolidation that was just a thing of beauty as far as how it was orchestrated. Healthcare, daily consolidation technically underway, not significant at this point. Lower wick of bulls buying the dip into the end of the day on an hourly bounce. So we'll be scouting for an hourly trend change back to the bulls to be looking for a daily higher low to be set. And a simple statement for me is if the bulls are holding daily EMA 12 support, they are keeping their control and keeping a healthy uptrend. Lose the daily EMA 12 and we'll be shaping up a weekly lower high for potential weekly equilibrium and tightening range. Semiconductors put on an absolute show today. And you can see the volume, probably the highest volume day ever. If you're talking dollar volume, considering this is 15% higher than these comparable share volume days. And just a gap and run. And first thing this morning, I was watching for the potential that NVDA was going to be a gap up climax because we've been running hard the last few days and it has not been gapping up. And sometimes you'll see an extended move in one direction or the other, upside or downside, and it won't be gapping. And the first gap in a while leads to that climax. It became very clear within the first 15 minutes of trading that is not going to happen because what would have had to have happened would be an initial bull move up and then have dropped straight down and a new low of the day. And as soon as we just started chugging along and holding the 5-minute uptrend for the vast majority of the day, the bulls just kept absolute control. And a lot of people probably left money on the table. And again, you can choose how you look at that. The lesson, the takeaway is hold at least a partial runner as long as there's an uptrend. Base, some profit taking on profit targets or price level targets, but leave a runner and say some trend line, whether it's the 5-minute uptrend, the hourly uptrend, the daily uptrend, I will hold this position as long as this time frame is in an uptrend. And yes, you'll give back some profit from the top, but you have the potential to capitalize on something you don't expect to happening, which again, I would not have expected this as far as this size move with this size market cap. I mean, Tesla is really one of the only things we can look at as far as similarities, but just an absolute beast of a day. They got an upgrade in the middle of the day to keep that move going. We're looking for an hourly higher low. 5-minute oversold conditions did not occur. We'll be scouting hourly oversold for a daily higher low, but just massive momentum and AMD benefiting as well with its breakout to all-time highs. Not the same flashy move, but certainly a good one. Biotech sector, 136.61 resistance coming into play. There's a potential top fish there for aggressive bears. And if we pull back, we'll look for a daily higher low, but we will remain within a tightening range here. And that's it. Looking for a daily higher low, but the bears would have to break the low of today tomorrow to confirm an hourly downtrend. And we would likely need to see IWM with daily consolidation. They are very similarly correlated. IWM had a very clear 5-minute head and shoulders marking the top today. Recognizing head and shoulders all comes from the size of the consolidation, that for me. And it's the same trade that I was highlighting bearish oil. The size of the consolidation is significant enough that a lower high can form. And it's easy to say in hindsight, but IWM 5-minute head and shoulders, watch if high of day fails. And so you watch for the high of the day failing. And if it does, you can make an entry, put your stop over the high, and we had a very significant pullback from there. It's just a question of whether or not the bears can follow through. There's correlation between XLF, IWM, the biotech sector, and the energy sector. They're all on one side over here. Semiconductors, big tech, they're over here. And we saw, obviously, the financial sector weakness we just looked at, IWM with a bit of a pullback. Energy sector I haven't looked at yet, but I'm assuming it had a red day. Still not rolling over convincingly, but close to heading into weekly consolidation. And we'll look at commodities in just a second, as there was some red out there. So the dollar, watching this rising wedge, watching resistance, bulls having their control, and the metals are liking where they stand considering the dollar had a big green day. So big green day for the dollar, no sign of weakness, still a weekly uptrend intact, setting this higher low here. So new weekly higher low, 93.27 is a benchmark level. And with that, we saw gold with a solid green day. So metals, bulls love when the metals go up when the dollar is up, because that is a bullish correlation, and the dollar dropping generally and usually will only help that move further. So making initial entries, again, the trade game plan laid out earlier in the week, waiting for the weekly consolidation to come to us. And so now after initial entries, there are two ways that I play this. If that is our weekly high or low, the next entries that I make will be averaging up on bull breaks. So if we break our weekly resistance here, I will double my position size and average up because the trade thesis is playing out and I would anticipate more follow through. If we keep dropping, if we're just seeing a daily lower high and we drop down to another lower low, I will make a second entry. In that instance, it will be averaging down, but it will be part of my game plan to establish a second position, and my stops will be based off weekly support. That is the way. There are two ways that this is going to play out, and that is a game plan for each scenario. And of course, I would stop out if weekly high or low support is lost. Same thing for silver. So silver, same deal. Not going to repeat it. You get the idea. So SLV and GLD are the way that I'm playing this. Why am I not playing minors? Good question. Someone asked me that. Why am I not playing the minors, which are showing lead moves in both directions, and the bulls have been a bit stronger on this move up on the weekly time frame? The answer is simplicity. So with GLD, I have two charts that I have to watch: gold and the dollar. With SLV, silver and the dollar. If I'm trading the ETF for the miners, I have to be watching the metals, the dollar. I have to watch the broader market because they are traded on exchanges that are subject to fluctuations based on the broader market. And I have to watch individual companies. And there's the potential that those individual companies have earnings that I need to be paying attention to. If the top one or two holdings have their earnings coming up, it's just more to keep an eye on that I don't want to have to keep an eye on. So simplicity's sake is the answer. So GDX looking for a weekly high or low, and the bulls will need to hold the low of 30.96 and break 32.69 to be shaping up a weekly higher low. And if we break support, then that would be the scenario where I'm likely averaging down for my second entry on GLD and SLV. Natural gas daily lower high potentially shaping up. We're anticipating that a tightening range is more likely than not. 4 hour, still an uptrend. We would have to drop down and break 5.396 to lose that higher low, set that daily lower high, and be looking back down towards our 497 support. So a little bit of red in natural gas, a little bit of red in oil. I know Lori was all over this in the pre-market live stream. If you don't watch the pre-market live stream, I know a lot of you have lives that get in the way, but she does such a good job of putting out a ton of helpful free information and setting up trade ideas, and she is on a roll. So oil confirmed the daily downtrend, saw a very significant bounce, and then flushed to a lower low. That's very meaningful for me because that was a big bounce, and I normally would anticipate a higher low would be the most likely scenario there, but the bears showed up with their volume and got that lower low. So the weekly consolidation continues. We have a clear 4 hour downtrend to be watching as a guide. Seeing if there's a 4 hour support line or a 1 hour support line. Man, I'm just going to stick to the 4 hour. And next major support level is 74.67. Psychedelic sector, CMPS just won't quit. It just keeps grinding up. It's not giving bulls a chance. It went from fear to FOMO. We hit the lowest price in many months, lowest price in almost a year. And just like that, V-shaped recovery, over a 50% move, and no chance for entries. I mean, small chances, but if I were, that's why I went to the other names, because I didn't see a setup that I like for CMPS. But if I didn't go to ATAI and MNMD, I would have missed this move because I would not have been comfortable entering at any point during the consolidation over the last 2 weeks. So it is a runaway bull. It will consolidate eventually, but not yet. And we are in an area without a ton of resistance. We're looking at 47 and 49 as the next two levels. Short-term support is now 42.51 just because there's nothing else nearby, and the potential to run into earnings. ATAI, I took a third profit of my swing position. So again, swing entry, I made it either the 28th or the 29th, down in the 1420s. I day traded it at one point. Forget what the day trade setup was. I think I entered into strength. MNMD popped, and I doubled my position size for a day trade. So I dropped my break even then down to maybe 1380 or so. I just sold a third of my position yesterday in the low 17s. So now my break even is, I can't lose on this trade unless there's disaster overnight news. So we're testing key 1790 weekly resistance, and this bull just won't quit either. There's not a ton of volume here, and the liquidity isn't ideal, but bulls just keep grinding higher, and we keep setting a higher low every day for the last 7 days in a row now. So it's all about 1790 still, and there's plenty of space for a daily higher low next time we consolidate. We've got earnings for the sector approaching over the next couple of weeks that we have to be keeping an eye on. MNMD looking a little bit more tired. We broke the high of yesterday by half a penny or something. So the double top with the high of yesterday. And if we break 274, daily consolidation will be underway. And it's possible that MNMD is the first for daily consolidation just because it is the weaker name today. Crypto stocks still higher highs, slowing down a little bit. Bitcoin getting a little bit less convincing for a weekly bull flag. It's still certainly on the table. Bears still have to prove to us that it's not a weekly bull flag. But, well, coin closed strong as well. And HUT with a weaker close. Metaverse names getting the hype. And again, the point that I keep making in videos about opportunity and patience, this is a skill that takes years to get good at. 3 to 5 years for you to be in the zone, confident. I can make markets. I can make money in markets, as long as there's markets. That's the timeline for me. Obviously, it's very different if you're putting in 1 day a week versus 6 days a week. So it's hard to, say this many years, but years and thousands of hours. But the trade-off and the payoff, it obviously depends how old you are. But if you can learn a skill for 3 to 5 years that you can use for 10, 20, 30 years, knowing that who's talking about the metaverse 5 years ago? Nobody. 5 years from now, we're going to be trading a hype sector that nobody's ever heard of, and it's a new thing, and new technology, and new opportunity, and markets, as long as they exist, will give us insane amounts of opportunity. And when you have the confidence of putting in the time and learning from your mistakes and sticking with it, it is a playground of opportunity that is not going anywhere. So I hope you're well. Hope you had a good day today. We'll check back in, not tomorrow, over the weekend. Not over the weekend if you're not a Chart Guys member, sometime. And we'll see you soon. Do good things. That's me.
Hello, I'm the guy with the microphone, Charting Man Dan. In this section, we're going to be talking about emotional and physical well-being of stock traders. It's not just about knowing when to buy and sell if we want to be... Hello, I'm the guy with the microphone, Charting Man Dan. In this section, we're going to be talking about the physical and emotional well-being of a trader. It's not just about knowing when to buy and sell if we want to be doing this long-term for decades. I'm going to be showing you a little bit around the farm and how I stay balanced. Nancy, don't eat that. Hey! Don't eat that.